Hello, I'm Michael Reinking, Senior Market Strategist at the New York Stock Exchange, and this is Market Storylines. Every week we're here to keep you up to date on the key trends and events driving global markets. We are recording on a very rainy Halloween Eve in a week chock full of tricks and treats. So let's dive into this week's Market Storylines. Now last week Eric talked to you about the stabilization in markets after the recent volatility shock as credit concerns quickly faded and as both China and the U.S. tempered rhetoric ahead of the trade meetings that began over the weekend. Now, for 9 consecutive sessions, the S&P 500 had traded completely within the range of October 10th session. Well, that streak came to an end last Friday after CPI came in a tenth below estimates, cementing a rate cut by the Federal Reserve this week. Now, looking beneath the surface, there were signs of goods inflation in tariff-related categories like furniture, appliances, and footwear. But this was offset by the long-awaited moderation in shelter inflation. Now, most major U.S. indices ended the week up between 2 to 3%, with the S&P 500 closing at a new all-time high, heading into a very important week for markets. Now, there are 4 primary drivers of trading this week: trade negotiations, the FOMC rate decision, earnings, and AI optimism, which has continued to be fed by the never-ending stream of news flow. Now, markets picked up right where they left off to start the week, as there were positive readouts from this weekend's trade negotiations in Malaysia, setting the stage for the meeting between President Trump and Xi Jinping, which I'll cover in more detail in a moment. Now, there was a broad-based strength at the open, but we started to see some rotational activity as small and mid-cap indices began to fade throughout the session. However, once again, tech picked up the slack as Qualcomm announced a new AI chip. The Department of Energy formed a billion-dollar partnership with the AMD to build 2 new supercomputers, and Optimus robots handed out candy in Times Square. Now, the headlines kept coming in what could have been called Tech Tuesday, as OpenAI and Nvidia halo effect continued to expand astronomically. OpenAI updated its partnership agreement with Microsoft and added PayPal's digital payments wallet within ChatGPT. Then Jensen Huang gave the keynote address at the GTC conference, announcing partnerships and investments to drive advancement in 6G networking, autonomous vehicles, robotics, and supercomputers. Now, this continued to drive gains across the AI complex, with Nvidia pushing to fresh highs and becoming the first company to cross the $5 trillion market capitalization. Now, this seems like a good segue into earnings. Now, overall, the reporting season has been solid, and over the last week, we've transitioned away from financial companies to a broader range of firms. From a macro perspective, management teams still sound cautiously optimistic, highlighting a still resilient consumer. But not surprisingly, the biggest theme is the strong AI infrastructure related demand, which is driving very strong earnings across subsectors in tech, industrials, and energy. Now, last night we got earnings from 3 hyperscalers, Microsoft, Alphabet, and Meta, which collectively invested nearly $80 billion in AI infrastructure last quarter. Now, their earnings were strong, though the reactions have been mixed. All 3 companies confirmed that the spending would increase in 2026. Now, after the close today, earnings from Apple and Amazon will be in focus. Now, let's talk about trade. Now, as President Trump is making his way through Asia, a trade deal with South Korea was finalized, and Japan agreed to partnerships related to rare earth minerals and nuclear technology. Now, President Trump said the meeting with President Xi was amazing, a 12 on a scale of 1 to 10, and the 2 sides essentially agreed to a 1-year truce, with China resuming rare earth exports and agriculture purchases, and the U.S. cutting the fentanyl-related tariffs and delaying a rule that would expand restrictions on blacklisted Chinese firms. Now, this is not necessarily the widespread agreement markets had hoped for, but does remove some of the trade overhang. However, keep in mind, the Supreme Court hearings about the legality of tariffs is set to begin next week. Now, let's close it out with the Fed. Now, markets widely anticipated a 25 basis point rate cut and the end of the balance sheet runoff, but the committee clearly decided that investors were starting to get too comfortable with expectations for further easing. So Chair Powell delivered a bit of a trick instead of a treat by bluntly telling markets that the path of monetary policy was not on a preset course, saying a cut in December was not a foregone conclusion, Far from it. Now, there were two dissents at this meeting, with Stephen Moran once again calling for a 50 basis point cut and Jeffrey Schmid calling for no action. Now, the chairman highlighted that while there was broad support for yesterday's cut, there are decidedly differing views about the path forward, centering around the estimate of the neutral rate and views about inflation. Now, the chairman did seem to tip his hand. He believes the current policy rate is modestly restrictive and described the labor market as gradually slowing and not sounding overly concerned about tariff-induced inflation. But he did acknowledge that the current Fed funds rate was now at the upper end of estimates of neutral, which are mostly between 3 to 4%, and used the navigating through the fog carefully analogy, again, perfect for the holiday. Now, the initial response was swift within equity markets, with the S&P 500 falling 1% intraday, but the index ended around unchanged as this seemed to reinforce some of the rotational activity we mentioned earlier, with tech holding up but cyclical areas of the market coming under additional pressure, closing near the lows of the day. Now, as we're recording, the S&P 500 is still up about 1% for the week, but the equal weight version of the index and small and mid-cap indices are down between 1 and 2.5%. Now, yields had moved up 10 basis points across the curve as rate expectations reset, and the U.S. dollar index is hitting its highest level since early August. Now, looking out to next week, the focus will be on earnings, private sector economic data, including the ISM surveys and the ADP jobs report, and the tariff court case. Well, that's going to do it for this week. Thanks for spending some time with us today. If you like today's episode, please tell a friend or leave a comment wherever you listen to your podcast. Enjoy trick-or-treating. Thanks for joining me. I'm Michael Reinking, and we'll talk to you again next week.